Hey there. Let's talk about trading, one of the most exciting ways to grow your money, but only if you understand the basics. Whether you're into stocks, Forex, or commodities, the core principles stay pretty much the same. Step 1. Understanding markets. So first things first, markets. A market is just a place where buyers and sellers exchange assets. These assets could be shares of a company, currencies like the dollar or euro, or even physical goods like gold and oil. The prices of these assets fluctuate constantly based on supply and demand. Step 2. Buying low, selling high. The fundamental idea behind trading is simple. Buy low and sell high. If you think an asset will increase in value, you buy it. Once it goes up, you sell it for a profit. But be careful. If the price drops instead, you could lose money. Timing is key. Step 3. Risk management. This brings me to risk management. No trade is guaranteed to make you money. That's why we always use tools like stop-loss orders to limit potential losses. A stop-loss will automatically sell your asset if the price hits a certain low point, protecting you from larger losses. Step 4. Research and strategy. Before jumping into any trade, research is everything. You should understand the company, currency, or commodity you're investing in, and follow global news because events like elections or natural disasters can massively affect market prices. Step 5. Emotion control. Finally, the psychological part. Trading can be emotional. Markets can swing wildly, and it's easy to panic or get overconfident. Sticking to your plan and strategy is crucial to making smart decisions instead of impulsive ones. Closing. Trading isn't a get-rich-quick scheme, but with knowledge, strategy, and discipline, it can be a great way to build your wealth over time. Just make sure you start small, stay informed, and manage your risks. Good luck.